It's been one dramatic week for crypto. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. Welcome to Forkast IQ, where we look beyond just the headlines to get you insights and knowledge that will help power smarter decisions. I'm Forkast Megha Chaddah. Now, the world's biggest economy launched a crypto crackdown unlike any other. United States Securities and Exchange Commission, which oversees securities regulations in the country, cracked the whip on two major crypto exchanges, Binance and Coinbase, with back-to-back enforcement actions. On Monday, the SEC filed 13 charges against Binance, its US platform Binance US, and CEO Changpeng Zhao, better known as CZ. The charges range from unlawfully soliciting US investors to buy and sell crypto through unregistered trading platforms, to unregistered offers and sales of the BNB and BUSD tokens. The SEC alleged that Binance didn't register Binance.com as an exchange or a broker-dealer clearing agency. Its complaint also said Binance commingled billions of US dollars of customer funds, diverting them in a way registered brokers or exchanges would have been unable to. The SEC also requested the Washington, D.C. District Court to approve a temporary order to freeze assets tied to BAM Management US Holdings and BAM Trading Services, the holding and operating firms of Binance US. In response, Binance and Binance US separately refuted SEC's claims. Binance said it was an easy target caught in the middle of a US regulatory tug-of-war. Meanwhile, Binance US called SEC's actions the, quote, latest example of regulation by enforcement. In a blog post, the company maintained that, quote, any allegations that user assets on Binance US platform have ever been at risk are simply wrong. And less than 24 hours after that, the SEC turned its sights on Coinbase, the largest crypto exchange in the United States. In a lawsuit filed at the Southern District Court of New York, the SEC said Coinbase has never registered as a broker, national securities exchange, or a clearing agency. The securities regulator alleged that Coinbase made billions of dollars unlawfully facilitating the buying and selling of crypto asset securities since at least 2019. As a response, Coinbase CEO Brian Armstrong tweeted, "We are proud to represent the industry in court to finally get some clarity around crypto rules." SEC Coinbase have been at loggerheads for some time. In March, the SEC issued a Wells notice to Coinbase and said it was considering legal action against the Nasdaq-listed exchange over its staking services and other products. Coinbase then sued the SEC in April and sought clearer crypto regulations. It's interesting to see that CZ, Binance's founder, was named as a defendant in the SEC's suit against the world's largest crypto exchange. But Coinbase's co-founder and CEO Brian Armstrong escaped the same fate in the regulator's case against the company. Now, as expected, the series of lawsuits has triggered a flurry of reactions from policymakers and industry leaders alike. In a tweet, US Senator Cynthia Lummis said, "The SEC's continued reliance on regulation by enforcement continues to harm consumers." She added, "This is why Congress needs the Lummis-Gillibrand Responsible Financial Innovation Act." Circle, issuer of stablecoin USDC, told Forkast SEC actions are, quote, long expected and right on the cusp of Congress seriously considering stablecoin and digital asset market regulation. We now effectively have three branches of the US government clearly signaling that they want to see legislation. The whole of government has a lot of work to do here, and it's a critical issue that's going to shape the future of our financial system.
It's absolutely mind-blowingly interesting times for the cryptocurrency space. There are several things at play here. If we start sort of high level at the geopolitical level, you can say that what we are seeing really is a shift of some of the industrial players from the so-called Western world, so European Union and the US, towards what is normally known as more crypto-friendly jurisdictions. And a few to mention could be Hong Kong, the UAE, Singapore.
Meanwhile, Alessio Quaglini of Hex Trust said it's an opportunity for the crypto industry to grow leaner, stronger, and more compliant. Prior to this week's events, the SEC's enforcement action have been chaotic, but their stance this week is crystal clear. And Mikhail Morch of crypto hedge fund ARK36 said this development in the crypto space proves that the US wants to regulate a previously unregulated industry.
I do think that a lot of players in the cryptocurrency industry believe that the SEC, they are tightening the nuts and bolts and screws a little bit too hard right now. And it seems maybe more like a witch hunt than something that is done in order to regulate an industry that is actually very often screaming and begging for regulation.
Now, the news of SEC lawsuits hit crypto markets hard. Bitcoin prices dropped over $1,000 in a matter of hours early morning Tuesday in Asia. Broader markets also tumbled on heavy volumes, but we saw some recovery as the week went on. Overall, crypto market capitalization stood at about $1.1 trillion by Friday morning in Asia, but Binance's BNB token continues to bleed, and it's currently trading at almost its lowest in 2023. So let's get it in. Gordon Grant of Genesis Trading to understand the market impact of all these moves. Gordon, great to have you here with us. Now, there's loads happening in the regulatory sphere over the last few days. US SEC suing Binance and Coinbase. That's obviously another setback for the crypto sector in the US. What's your take on all of this?
We know that the SEC has taken, I think, a stance of enforcement as opposed to immediate clarification on the regulatory front, right? They sort of regulate through enforcement. The Binance announcement saw a 5 to 10% move in crypto majors, right, across the board, sharply downwards, breaking through what appeared to be major support levels. And then on the Coinbase news, we had this one lurch lower before a very sharp bounce back. And so we tend to look at it and say, what is the market telling us in terms of pricing dynamics around these kinds of exogenous regulatory shocks? The simple answer is we didn't break the technical support levels.
Do you see any downward pressure building up on major names like Bitcoin and ETH?
In some sense, Monday's crypto market swoon on the back of Binance headlines, almost preempted this Coinbase-related action. And we already had seen these high beta tokens like Filecoin, like Ape, and others, many of which Genesis is an active market maker. They had already dropped 10%, right, prior to the Coinbase news on the follow from Binance. And then they had a quick rally, right, for no reason other than they've gone down, and so therefore they could bounce back up. Yet, while it could be a catalyst for further downside, there are an array of factors, including technicals, right? Support at 25,000 in Bitcoin, 1,800 in Ether, volatility market dynamics, right? There's a gigantic open interest in Ether options for the end of this month, which has sort of a gamma effect.
Gordon, Ethereum staking in May was at a record high, and other top altcoins like Polygon and Solana are seeing a lot of projects being built. What does this mean for the market? How do you see it performing over this month?
Let's start with the staking, which I think is fairly significant. Everyone's talked about this huge move by Celsius, or I guess now Fahrenheit. Fahrenheit on behalf of Celsius, sticking $700 million odd worth of value, onto the Ethereum main chain for staking. This I think is exciting because it tells us that people are embracing the notion of static return generation in a somewhat kind of traditional financial construct through a new technological mechanism. I think it's going to influence derivatives markets and trading rhythms. I think it's going to influence levels of implied volatility. And I think that it's going to have some snowball effect, whereby people become aware of these programs.
Gordon, such a pleasure talking to you. Thank you so much for joining in. We'll take a quick break then and talk more about the NFT markets on the other side. Don't go anywhere.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast News.
Thanks for staying on with Forkast IQ. This week's crypto crackdown in the United States also found a target in the metaverse. In its cases against Binance and Coinbase, the US Securities and Exchange Commission classified over 13 cryptocurrencies as securities, including a few metaverse tokens, the likes of Sandbox, AXS of Axie Infinity, and Decentraland's token Mana. Now, this could have a wide-ranging impact on the NFT ecosystem going ahead. So, good time then to get in Yehudah Petscher, our data analyst, to talk more about the NFT markets for this week. Yehudah, good to see you. What are you spotting?
It's great to see you. Well, there's all kinds of NFT impacting news this week, even if that impact won't be felt until a later date. Apple's new Vision Pro headset, while on the surface has nothing to do with NFTs, it stands to be the most important development for the metaverse and NFTs themselves since CryptoPunks. While many outside of crypto still struggle to understand the value of digital assets, namely how or why they can hold any value, it's mixed reality and virtual reality that'll make these digital items tangible. Projects like the Sandbox, Animoca's Mochaverse, and Yuga Labs' Other Side, they'll all incorporate digital land, skins, clothing from luxury brands, avatars, and so much more. And when the public gets to experience these, possibly through the lens of something like Vision Pro, well, you can expect to see a light bulb go off right over their head. It's an exciting time on the roadmap to the metaverse, and one that, even if we don't see the impact reflected in the charts today, well, it's sure to be a driving force in the future. So we'll keep our eye on those NFT indexes to see just how impactful mixed reality will be. Speaking of the NFT indexes, the Forkast 500 NFT index has been trending down, with a noticeable drop beginning on June 1st. However, 67% of newly minted projects in May were profitable for traders, but the index reflects that the NFT market is at an all-time low. How could this be? Last week I mentioned that traders seem to favor the newest hot NFT drop, and they're willing to sell their assets from existing, often highly regarded NFT collections. And that's exactly what you're seeing reflected in the Forkast 500 NFT index. In other news this week, the latest NFT conference arrived on Tuesday when the Non-Fungible Conference kicked off in Lisbon. NFC is the summer's hottest gathering of collectors, builders, and artists in this art and gaming-centered event. It was kicked off with the Cult Crypto Arts Eclectic Method and Broadside as they DJ'd an event, and then it closes tonight with the Sandbox Party. Should be a blast. One of 2022's most significant projects, called Azuki, they recently took flight again, and they landed on their highest floor price in over a year. The entry to Azuki, it reached over 17 ETH. And so while the Forkast 500 NFT index showed that established projects were losing value, Azuki didn't get that memo. And they even saw some massive individual sales, like a rare Azuki number 9236 that sold for over $300,000. In general, PFP projects have done really well the past few weeks, with Bored Ape Yacht Club, Mutant Apes, Milady, the Captains, and DeGods all making appearances in CryptoSlam's top 10 NFT collections by sales volume. Speaking of DeGods, you may recall hearing about them earlier this year when they made a cross-chain move from Solana to Ethereum. Well, now they're making another move. And no, they're not moving chains again. Now they're moving forward with innovative tech. DeGod's parent entity called DeLabs announced a new innovation called DID, which adds a new security feature for their holders. So DeGod's holders will soon be able to set up a delegate wallet from their main wallet, and that will allow them to mint freely without needing to connect their wallet that holds their most valuable assets. DID also introduces another feature which will make the DeGods and the DeLabs Twitter accounts automatically follow holders of DeGods NFTs, which that's really quite the flex in this space. So it'll automatically unfollow those accounts once a DeGods NFT is sold. It's an interesting new incentive system in an ecosystem that values the community. Let's finish with one of my favorite topics, NFT art. Just this week, we saw another massive art sale, and it was yet again one of Tyler Hobbs' generative art masterpieces. It's Fidenza number 545, which sold for over $1.1 million. Interesting bit of info for you. You may be aware that crypto often trades in cycles, and it's usually the main cryptos that run. It cycles to altcoins, and then it goes right back to those main cryptos like Bitcoin and Ethereum. Well, NFTs have a similar cycle, and traders usually cycle from PFPs, the profile picture projects. They go from those to art, and then it flows right back to those PFPs again. So maybe we're seeing the beginning of an art cycle here. We'll see how this shakes out.
A very interesting week for the NFT world indeed. Yehudah also sat down with Sebastien, Borget, COO of the Sandbox, to talk about the metaverse, NFTs, and how data will propel the next phase of growth for this ecosystem. Listen in.
The term metaverse was introduced in 2021, 2022, when the public first heard the term metaverse. And at the same time they heard this new term, they had to grasp just how big the metaverse would be, and they were forced with that when Facebook changed their name to Meta. So over those years, there was an endless number of games and experiences that promised that they would deliver the metaverse, and ultimately very few did, and it left the public maybe a little confused. There's no better person to maybe explain what the metaverse is than somebody building the metaverse. So Sebastien, what is the metaverse?
Well, we really see the metaverse as like this myriad of virtual worlds where anyone can access through an avatar that's digital identities, that 3D characters that becomes our representation of ourselves into those virtual worlds that are more social, more immersive, more creative thanks to technology. And we have this ability with our avatar to move along between any of those virtual worlds without having to ask the permission to the games or the platform or the services that are hosting them.
And I've watched as brands came into the space, also attracted by what it is the metaverse has to offer. You work closely with these brands. What is it that they see in the metaverse that has them so interested in it and really flocking to it now for again, multiple years?
Generally speaking, many brands have kind of missed the opportunity of like technology and how it can be leveraged to engage with their customer, their audience, their fans. So they were kind of late as well in space of social media and Web 2 in general, where like they could interact with like audience by posting more like user-generated content, etc. And when they joined it, they finally understood as well that progressively they were giving up like the relationship they have with those users to the platform that own the data behind, that own that relation, that link with the user. So in a way, and for the first time, they were early on into Web3. They understood that users owning their data and offering like a community-driven and user-centric approach which is at the center of the value proposition in Web3, was also a way for them to win back that relationship with their audience, because they could reactivate them bypassing the platform and having a more direct relationship.
There's a whole, I guess, assortment of assets that people can invest into now in the metaverse, in the digital ecosystem, that is NFTs. It's exciting to say that Forkast Labs and the Sandbox have partnered to make a new metaverse index that will measure the value of these assets, specifically NFT assets that are part of the metaverse focused. And why is it so important to measure those assets independently, or I guess just as metaverse assets together? What is it that the public will gain from looking at this new metaverse index?
I think it's really important like to share as much data, because that's one of the strengths like we have in Web3. Like the data is publicly available on-chain, on a public ledger that can be trusted, that like provide the transparency and level of trust, so that not just a single party can alter that data. You don't have to rely on APIs and so on, like in traditional Web 2. In Metaverse is like helping like brands and people who are not in the intrinsic day-to-day of what's happening to get a more like high-level view, curated view of like the activities ongoing, the volume of transactions, the number of unique users, their engagement, the value of those users as well, like how much their digital asset ownership are worth, etc. When you have data, you can take more informed decision, first of all, like to build and to decide like the platform where you want to engage, how to target user based on their like certain characteristic, digital asset ownership, communities, and so on. You can also like start developing more services and even like startups and products that will leverage that data, aggregate it in a certain way, and offer a service on top of it, using the data almost like as data component or bricks toward it. And ultimately, I think like we've seen that before in mobile gaming. I think like we need external companies that analyze the data, provide those indexes, provide this level of intelligence on top of the raw data to grow the industry.
On that note, we'll take a quick break and I'll tell you all about Circle's big win in Singapore on the other side.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built and Forkast has it covered. This is Forkast News.
Welcome back to Forkast IQ. While crypto exchanges and cryptocurrencies are in the hot seat in the US, the other side of the world, it's a different story for stablecoin issuer Circle. On Wednesday, Circle Singapore, an affiliate of US stablecoin issuer Circle, got a major payment institution license from the country's central bank. The license from the Monetary Authority of Singapore allows Circle to offer digital payment token services, cross-border money transfer services, and domestic money transfer services in the city-state. In a statement, Circle's Chief Strategy Officer and Head of Global Policy, Dante Disparte, said, "This is a significant step forward for Circle and the future of financial infrastructure and dollar digital currencies in the region." Now, earlier this week, June 5th to be precise, was the World Environment Day, a day to spread awareness about protecting our environment, and this includes call to action for various industries, including blockchain. We often hear about the transformative potential of blockchain technology, but what about its environmental cost? Forkast Jenny Ortiz takes a closer look.
Blockchain technology, known for its decentralized nature and encryption features, is increasingly playing a central role in various industries. But this advancement doesn't come without an environmental cost. For instance, Bitcoin, the most popular application of blockchain, uses energy-intensive proof-of-work algorithms. It's estimated that Bitcoin consumes almost 130 terawatt-hours of electricity every year, which is more than the entire annual electricity consumption of Norway. Why is it so energy-intensive? Every time a Bitcoin transaction occurs, computers worldwide race to solve complex mathematical problems. This race or mining process secures the network and guzzles enormous amounts of electricity. And worryingly, much of this energy comes from coal-fired power plants, increasing the carbon footprint. In April, the World Environmental Forum published a report highlighting the environmental impact of the technology. The report said recent criticisms of the energy consumption of blockchain networks have led to some positive developments in transparency and the modeling of different protocols. But more should be done.
We have sustainable protocols such as Hedera that are 9 times more efficient on a transaction-by-transaction basis than, for example, TradFi. And you have a lot of other protocols, from Flow to Avalanche to Celo to others, that are vying for the status of most sustainable. And so, what we need to do is focus on the greener, the more energy efficient and carbon neutral protocols, and look at what use cases are being built on those networks.
So how can blockchain and crypto companies become more sustainable?
Every industry is faced with the same climate challenge that we all are going to have to deal with. And so it is important for every industry to look at their carbon impacts, their environmental impacts, and report them credibly.
Accurate and editable reporting is also important.
Auditable means that if you report data on a blockchain, it'll be possible for a member of the public to transparently look at that data. It's not just at the level of reporting, it's also at the level of the creation of digital environmental assets that are helping redirect private finance to environmental and climate projects.
So far, ESG reporting remains voluntary for blockchain and crypto companies. But the WEF says this can create an effective dialogue between policymakers and other stakeholders on the impact of blockchain and cryptocurrencies on the environment, which could push more legislations in favor of sustainability. One example is the recent Markets in Crypto Assets Law, or MiCA, passed in the European Union, where EU legislators address the environmental concerns associated with crypto.
If you look at the last several decades of environmental action, well-meaning people have worked very hard, but the result has not been what we needed. And so if this industry of Web3 can innovate our way towards a solution, we should embrace that.
The message is clear. If we hope to harness the full potential of this transformative technology, we must ensure it doesn't cost us our planet. Jenny Ortiz, Forkast.
Well, that's a wrap on this week's show. Thank you for tuning in. Remember to like and subscribe to this video if you're watching us online. Stay tuned right here on this channel if you're watching from home. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Megha Chaddah. Join us again this time next week as we bring you the latest from the world of Web3 and data and why it all matters.